What's up everyone, it's Kadi with Money Investing. In this video, I wanted to revisit and talk a little bit about the 11 signals that we were waiting for in order to actually be a buyer in the market. Now, these are 11 signals broken down into fundamentals, macros, and technicals. And in my previous videos, I've also talked about how they not all might actually trigger at the same time. There's also going to be discrepancies because there's a lot of different lagging indicators with respect to leading indicators and how the market moves, prices certain things in. So I'm going to revisit exactly, show you guys where we are, where certain indicators are, and what I expect moving forward from the market. So I hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. And the fundamental and tech analysis courses, like I said, there is a 60% discount and you get lifetime access to it. And the coupon code is going to be Easter if you are interested. That's also going to be the first link down in the description below. And the entire bundle is going to be 60% off. So this right here are some videos that I've actually done. Again, 7 months ago, talked about the 11 signals I'm tracking before I buy the full list. And I also mentioned there is going to be that window of opportunity, right? So the next 6 months from, September all the way till March, that 6 months of opportunity for us to consider buying and dollar cost averaging, considering how the markets have been selling off pretty aggressively. But since then, since October, of course, we've seen the markets rally quite aggressively back higher. Not exactly back up to all-time highs, but the Nasdaq's up a little bit over 20%. S&P is also pushed higher quite a bit. And of course, we're starting off 2023 with a bang, and first quarter results being very, very strong in terms of returns for the market. Earnings-wise, we're going to find out how the companies did starting at the end of April. Now, this right here were the 11 signals that I mentioned, broken down between fundamentals, technicals, and economic. And more specifically, what you will notice is that the market, the way it's pushed up since October, November lows, a lot of it was more of a technical signal, right? We did see a lot of momentum back up in terms of the technicals for the markets getting really to an extreme level. So if you come down to what really the technical signals were, S&P 500 down 20%. And if you go back to 2022 and watch some of my videos, I talked about how rare that event is, how rare it is for the S&P 500 to be down 20% and be in a bear market. It is extremely rare in the last 150 years for the S&P 500 to be down over 20%. Yes, it's happened in certain circumstances. It's happened back in 2019, 2020 when we had a bear market because of COVID. It happened once again in 2018. We had a bear market for the S&P. It happened back in 07, 08. Happened back in the dot-com bubble, 2001, 1999, late 1990s, late 1995. We had it back in 1978, 1980s. So it's not like it's not happened ever. It has happened, but it is extremely rare in the grand scheme of things, right? If you compare that to 100, 150 years of bull market where pretty much the market's been pushing higher, it is a rare event. So this right here was one of the first technical signals when the S&P 500 down 20%. That was our cue to be buying and dollar cost averaging. Number two, RSI, MACD being incredibly oversold. So another thing that we were looking for from a more technical perspective was the momentum and the breadth behind the market. And this right here was a third one, which is percentage of S&P 500 stocks trading above their 200 simple moving average below 10%. So if you come over to this particular indicator where the S&P 500 percentage of stocks trading above or below their 200-day moving average, you'll notice that this number right now sits at over 53%. And back in September, we were as low as 10.6%. So we perfectly did hit that number back in September 27. We were as low as 10%. In fact, this number came down to a low of about 10.13%. So this was very, very precise. And of course, another technical indicator getting hit. And last but not least, volatility at over 35. So if you come over to the VIX, right now, of course, it's trading at over 18.39. But if you come back to March, we were trading as low as 30. And then even further back, going back as far as October of last year, we were once again almost at 34 to 35 levels, right? So we were exactly pinpointed to that levels at 35 for the volatility. By the way, this video actually came out 7 months ago. So we're going back even further before the market's bottomed. But the four signals over here perfectly got hit, right, from a technical standpoint, and we did start to see a recovery back higher for the market. Now, what didn't really happen, well, to some extent, maybe it did. S&P 500 valuation, it did drop below 15 levels at one point back in October. Fair values, a lot of the fair values were getting triggered as well for the market for S&P 500, for the Tesla stock, for NVIDIA, for AMD, for Apple, for even Microsoft at one point was trading closer to fair values, but I had a little bit more of a stricter fair value, closer to 200. We also had Google, we had Meta. A lot of companies were trading at near my fair value, if not lower than the fair value. The Buffett indicator never really dropped below 127%. In fact, it was pretty elevated to begin with, and it was always at over 140, 150%. For those of you who don't know, Buffett indicator is simply the market cap of the entire market divided by the GDP, the gross domestic product. And yes, the market cap right now is bigger than the GDP itself. And right now it is sitting at a little bit of 167% as well. And the valuation, the price earnings model, this is again based on a trailing 12-month basis, I believe. But my analysis does show that on a forward basis, the P multiple is closer to 19 to 20. But they're suggesting that the current 10-year P ratio is 29, which is much higher than the median and the average P multiple for the market as well. But again, my analysis does suggest that the forward price earnings multiple is closer to 19 to 20 levels. So when it comes to fundamentals and technicals, I mean, there were a lot of reasons to be bullish, right? There was a lot of reasons for the markets to push higher. I mean, the valuations were coming down, fair values were getting hit based on conservative estimates. We had S&P down over 20%, a very rare occurrence. RSI MACD oversold, and percentage of stocks trading below their 200 SMA was down to 10%, and the volatility was also high. But the only thing that didn't quite pan out was economic signals, right? Economic signals meaning that some of the more underlying things within the economy that are still problems to this day. And number one, we talked about inflation, right? Inflation getting back under control. In the last 7 months, it has peaked and it has started to come down, but it's still nowhere near close to the Fed's target. That is still a problem. Now, this right here, Fed funds futures with respect to CPI, the consumer price index, turning positive, that spread turning positive. Now, in some cases, this depends on what you compare it to. The Fed funds futures right now pricing in about 5%, and the core PCE is at under 5%. So that spread is positive. But if you take into account core CPI or even headline CPI or headline PCE, then this number is still negative right now. So we're not quite there yet from an economic signal where the Fed funds rate or the interest rate that the Fed controls is above the inflation rate. It's still negative at the moment. So unemployment above 5%. We haven't seen that. By the way, unemployment numbers coming out today. So at 8:30 a.m. Eastern, we're going to get those numbers come out. Right now, we have been ticking higher a little bit, and the jobs market, in my opinion, has been slowing down, but it's still under 4% right now. So unemployment has not ticked up to over 5%. Even the Fed's expectations of unemployment is pretty stable, and they're expecting inflation, in other words, employment to be under 4% even by the end of this year. I think it's closer to 4.1%. And when it comes to last thing, which is a recession, haven't seen that yet either, even though I do believe the earnings recession will begin after the first quarter earnings are released. And an economic recession, given all the other indicators that we're looking at, all the data, the probability is still pretty high. So the real question then becomes, how are these economic signals going to affect the fundamental and technical signals for the market once again? Because technicals can go back and forth all the time. We can see the markets, down 20% and then rally 15% from those levels and push higher once again. We can see the markets oversold and overbought, and volatility go back and forth between 30 and 18. So it's very normal and common for the technicals to swing pretty aggressively and take the valuations with them. Down less than 15 times earnings to all the way up to 25, 30 to, even as low as 12. So it can swing in either direction fairly quickly, and fair values can also get triggered and the price targets can get hit. I mean, stocks can move up fairly quickly, but the real question again remains, what is going to be that economic landscape or environment that we're going to be dealing with 6 months or 12 months from now? Because if there is a recession and unemployment does spike on higher Fed funds rate, then yes, there is a high probability that inflation comes back down under control, but there's also a probability that earnings also do pull back in the short term, which is going to be that big cue to be a buyer in the markets once again, because a recession means lower earnings, which means lower stock prices, and that means lots of opportunities, lots of dollar cost averaging and buying opportunities, but eventually earnings kind of reverting back over to mean and pushing higher as inflation's back under control and the Fed can start its QE program. So looking at this right now, where we are, unfortunately, we are nowhere near close to any of these indicators, right? So if you consider where the market is today, S&P 500 is not down 20%. We're not oversold. Percentage of stocks trading above their 200 simple moving average is right now at 53%. So a little over half the market right now is trading above their 200 SMA. Volatility is about its lowest as we've seen at 18, 19. Valuation's gotten up to over 19 to 20 levels. Buffett indicator, I showed you guys 167%. The stocks are not trading anywhere close to my fair values, and these things still remain. Economic signal wise, we still have a little bit of uncertainty. So what I'm personally doing in this market is really just two things. Number one, I'm storing up more cash. So the one thing that I mentioned in our Discord community earlier this week is that I am actually planning to increase my cash exposure. Right now, it's at closer to 24%, and my goal is to keep increasing that level higher in order to save for better deals, both in the stock and the real estate market by the end of this year or maybe even next year. I think there is patience that's going to be a big role that's going to be played by people who are patient and people who have liquidity. In any recession you look back, people who come out ahead are people who had liquidity and were patient enough for the deals to come to them, for the prices to come to them. So that's exactly what I'm doing. I'm just kind of saving up some more cash and storing and increasing my cash exposure a little bit. Number two, I'm trading options, right? That's another thing where you can take advantage of a lot of volatility. The markets, if you take a look at where the markets are over the last 1 year, they have really just gone sideways. They haven't really budged at all. I mean, yes, 2022 we were selling off, but if you take a look at the 2021 versus where we are now, markets have simply just gone sideways. And so have many other stocks. Right, Tesla for the most part in the last 6 months has gone sideways. It has gone down and then gone back up, but for the most part, it hasn't really moved much from where we were 6 months ago. So options is really, really lucrative in these types of market environments where you're able to trade off of a lot of volatility. You're getting a lot of directional moves and then kind of trading in a very range-bound pattern. Number three is that I'm also looking at trimming some positions that start to become a little bit more overweight in my personal portfolio. So taking some profits off. So I did let go of some NVIDIA, did let go of some AMD as well. So cutting some semi stocks in order to raise some cash and also take some profits off the table. And last but not least, just really focusing on swing trading for all the members, for all the Discord community members, because this really is the environment to be swing trading because the markets are so sideways consolidating and they're giving us all this opportunity where we're not really going anywhere. We're not moving higher or lower. Instead, we're just going sideways. So from a fundamental and technical analysis standpoint, looking at these signals specifically, which I created for myself, this is not really a market to be buying aggressively. And then, of course, from an economic signal standpoint, there's a lot of uncertainty that still needs to be dealt with. So the more answers we get, the better it's going to be for the market moving forward. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. As always, make sure that you drop a like, subscribe to the channel, and also link to our Discord and Patreon is going to be down below if you're interested in joining us. And don't forget, it's the first week of the month, usually the best time to join for our Discord and the Fundamental and Tech Analysis courses. The bundle currently 60% off. Link's going to be down below. As always, happy investing, and I'll see you all in the next video.